All right, let's jump into it. Where we at? It's 12:24 on Saturday, the 6th of December. So first week of the month down, and up and down kind of sort of week for it all. But that's the whole point of these sort of weekend wraps and that sort of go through, have a look at a couple of sort of bits of data, a bit of the landscape that we sort of saw develop sort of throughout the week, and of course, hopefully try and sort of work out some plans and plans of attack for the upcoming week, and obviously sort of have a look at what data we got coming up because of course it's FOMC week coming up now. So excuse me. Just to sort of skim over a couple of the larger sort of bits of data. Um, Look, we had ISM manufacturing in that PMIs there. Look, a little bit of a tick down. The general sort of overarching sort of theme with the US data at the moment is apart from the fact that they're doing big sort of lagging catch up. So like we're getting data out. Like we had PCE out last night, but I think that's like sort of September's data and numbers. So you got to take some of this stuff with a grain of salt, and so the impact that it can actually have is can be a little bit sort of muted, can be delayed, can just not really eventuate. It's really that sort of shutdown really sort of seems to have stuffed things up a little bit in terms of the data. And of course, we did first week of the month, we should have been getting NFP, jolts, these kind of things, but we didn't get that. So we're missing those big chunks. And particularly why that's important at the moment is because the market's very, like the last real sort of picture we got ADP this week, which I'll touch on in a sec, but the last real sort of jobs, well, okay, so let me start that again. The last position we were in prior to the shutdown was the jobs market was not looking to crash hot. And so now that we're not getting any of that fresh, updated data, the market doesn't know is that still the case or is it eventuating into something that's not too bad. So, and from that, on top of that as well, sorry, I should say, we're getting a bit of a mixed lot of data because if we just sort of look down, like sort of narrow down onto the job side of things, we had the little bits and pieces that we are getting is ADP here. So ADP 47,000, which is the private jobs numbers. 47,000, this is the monthly as well, expected at 5. So they're expecting a drop off. Negative 32, which is a shocker. ADP is a little bit different this at the moment going forward because typically we used to get one print first week of the month on the Wednesday. Now it's weekly, and then they do a monthly collective. So to a certain degree, you could probably almost sort of like assume what this is going to be based off what your weekly numbers are. Like it's not going to basically just one missing week to be the big tally for the week anyway. But the point is that's not good. You know what I mean? ADP is not the big. It's not like NFP, but it's something that's sort of going. It's the only bit of well, not the only, but it's one of the sort of only bits of data that we're getting in regards to the jobs at the moment, and that doesn't look good. But contrary to that, we are getting unemployment claims. Now, obviously, unemployment claims is the other side of the things. You got, these are jobs that are sort of being created and, people being hired. This is people obviously searching for the unemployment, and this came in drastically under what we have been seeing for quite a while. If you look at the sort of history here, 216, we're going back to September where we had one little week down at 218, which obviously is a bit of a drop off from the weeks prior to it all. But, I've said with this at the moment, 220 and below is generally seen as dollar positive in the 220. So 229 and below, dollar positive. And this is kind of what we've seen the last sort of, 5-6 weeks or so. Oh, sorry, actually, anyway, do we play catch up with this as well? Anyway, the 5 or 6 prints in that have been around that number. 191 is obviously even better than that, considerably better. So, you've got, okay, maybe less people that are sort of being hired, but you've also got less people that are actually applying for unemployment. So you can see that sort of like, is the job market good? Like, okay, people may not be hiring, but their people aren't being fired, well, hence going to the unemployment. So what is the actual sort of state with the jobs market? And I think this is the big sort of question with it at the moment, because if you play this out, the Fed have got, well, all central banks have got different mechanisms and a different approach depending on what they see as the main factor moving into the FOMC, the rate decision, and also for their sort of forward guidance kind of sort of thing, how they're going to word their things and how they're going to sort of approach things in the coming sort of months. And obviously, sort of like if the jobs market isn't so bad, but inflation is bad, well, the response would be to hold rates. Now, it's pretty much guaranteed, you never want to say it's guaranteed, but if we have a look at where the little Fed expectations are for the cut, for this load, we're at 12.8. So this dipped down to around sort of maybe 9, but 10% or so, some say too, up a very small snip, blip. But you can see pretty much it's guaranteed that, as I said, nothing's ever guaranteed, but it's widely accepted that there's going to be a 25 base point cut, sort of come, was it Wednesday? Thursday morning, I think, possibly, for the FOMC. And this is the thing, it's sort of like, as I said, so because it's so expected that the Fed are going to be sort of cutting at least 25 base point, the market wants to see what's the viewpoint moving forward after this. Because it's pretty much baked into the price. We've seen weakness in the US dollar as expected coming into this. Let's just go onto the chart. I could sort of do a little bit back and forth with this, but you can see the dollar has been sort of under pressure, the last couple of weeks or so. And this is expected when you're sort of expecting, like this price action is kind of expected when you're expecting a cut. The positions don't get done on the day. The profit doesn't belong to the people that sort of go, oh, they cut. Okay, now let's short the dollar. No, that's when people sell into it. I've referenced this the other week, but if you have a look at the New Zealand dollar from when they cut, I mean, they cut here a week and a bit ago, and that's up 3%, 170 points. Commodity currencies have been on a bit of a rip, Aussie as well. But the point is, it just shows that, they're going to cut, they're going to cut, they're going to cut, they're going to cut, bang, they cut, oof, moves up like this. So it's not always guaranteed that this will work like this, but I've covered it a number of times with the DXY on the larger scales. This is a chart. With this as an example here, this was they're going to cut 50 base point. This is the reaction. They're going to cut 25 base point. This is the reaction. So there's a good chance that, we see this little bit of weakness coming into it here, and then we see a rebound. Not necessarily up to these levels over here. Excuse me, we'll get to that when we get to that. But the point is the market's not quite sure. Let's get this on something that's a little bit more reasonable. The market's not quite sort of sure what the outlook is going to be for the Fed moving into 2026. And the reason that this is sort of like so crucial in that at the moment is because if they highlight that jobs is really an issue, well, most likely they're going to have a dovish approach. And by having a dovish approach, we could see a continuation to the downside of the dollar. Now, if they say the jobs market isn't too bad, and maybe when we get some sort of like, NFPs and all this kind of stuff over the next month and a bit and that to sort of support this, and they say jobs aren't so bad, but we can't let inflation get out of hand, then we could see some movement to the top side with the US dollar, because the way that they'll tackle the US dollar is to have a bit more of, I guess, if it has to be either hawkish or dovish, it'd be more of the hawkish persuasion. So hawkish would be hold hike, dovish would be pretty much at this stage just cut. So if they say that, hey, look, the jobs market isn't too bad, inflation, we got to really make sure that doesn't get out of hand, US dollar will move up, will appreciate. If they say that, hey, look, jobs is really something that, we can't let this sort of get worse, we can't let it go into a recession, we're going to have to sort of, they're always going to be data dependent, this kind of stuff. But if they say that their approach is going to be more of sort of a jobs outlook, then obviously more cuts are still on the table. and we could probably see US dollar drift a little bit lower. Now, if you have to sort of take one stance or the other, I'm more in the idea that I think they'll cut, and I think they'll sort of say, hey, look, you know what, this may be it for a while. We're going to sort of go on hold, and we're going to see how this plays out. Not really based on anything. That's just how I'm approaching the sort of the Fed meeting. And if we have a look on the chart, it is setting up very nicely for a potential squeeze back up over this side over here. So we've had 3 days holding this 38%. And this is the 38% right off the lows. It has dipped down underneath, if it looks a bit sort of better on the 4-hour chart as to a potential range. This sort of range through here. I did think we would get a pop earlier yesterday, obviously tested the lows again, but it started to come through into the last couple of hours. Still in this little downtrend channel, but it is sort of pressing towards the top side here. So I think Monday will be interesting. If we can get above that wick, let's put a little alert there. So we're going to call this one sort of out of the channel, out of downtrend channel. And once we get out of this downtrend channel, it doesn't mean obviously, okay, everything's better, but you know, obviously you've got to break that channel to start, hence over here, back up to test the highs. If we break here, first target's just to close that gap that we left open from the other day. Now, the thing with the gaps is that I always sort of say, look, the gaps will happen every day. Like every day, you'll see these things, boom, boom, boom. It'll either close the gap straight away, hence this little one just over here, or it'll close it in another little gap over here, just to emphasize the point. We left this gap open for a little while. It'll close the gap straight away. If it doesn't close it straight away, it'll close it in Euro session. If it doesn't close it in those 2 sessions, like straight away Asia or into the Euro session, generally it stays open for about, it can be around 2 weeks or so. This is a good example here. Like this is on the 6th of November, and then sort of comes up 18th of November, close the gap, fumbled around up here, and then obviously we sold down over here. So this gap's been open, I think it was Tuesday, was it? Wednesday. Wednesday. Yeah, Wednesday. We had the gap open there. So we'll see how this goes. But certainly, I think if you can pop that 99.14, we look to close the gap. There's a bit of a horizontal through here. As we can see, this is those previous highs from back in October. So, there's a couple of levels to really sort of break ahead. But, your short-term targets, close the gap, get across this little middle line here. But really, these wicks that we saw on Tuesday, that's going to be your ticket there. So let's put this over here and bang, that's when you're going to see price appreciate a little bit more. And we have the idea that this could potentially turn into a little bit of a range through here. With this as well, obviously, sort of like if that does happen, that makes this a fake breakout because people are going, okay, it's coming down, cut's coming, yada, yada, all this, US dollar weakness. Everybody's piling short down here. Well, they're going to have their stops around these levels. And that's what could be feeding the move back up. And that's why getting above these wicks over here will be crucial, because this is the last big sort of sell down in this downtrend channel as of this moment. That's going to be stop central. So there's going to be a bunch of stops here, and that's going to feed things to move it back up to the top over there. Now, if we sort of play out the idea that you've got the FOMC coming, cuts are happening, we look at previous reactions post-cut. Well, post-cut, as I showed before, can be dollar positive. Not guaranteed, nothing's guaranteed, but given previous price action, market sort of is, oh shit, we're cutting, stay weak. Then the cut happens, okay, relieve some pressure, sell into it. And now we can sort of move on. And that's where the outlook is important. Because if, as I said, if they highlight in the press conference that if Powell says, look, you know what, we're going to see how things go for a bit now. We've done our cut, but that's it for the moment. And if they sort of on top of this sort of highlight that inflation is something to look for, to be sort of be mindful of and watch out for, that's what's going to get the dollar moving. And should that happen, these are your little targets. That's fine. Come up here, and I've put the little potential measured move price target should we break 104. Now, the same obviously goes for this breakdown here. If this fails here, you could go double top. and then come down here. We still have this gap from back in start of October, never closed. So that will get closed at some stage. To keep in mind that your stole's not running forever because these things do like to close. We did have a gap, I think last year, the year before, and that took about 8 months to close. So it is possible, but generally things close 99 out of 100 times. So anyway, point is that's forward thinking. This is moving forward. FOMC, if we see a 25 base point cut, that's fine. May keep the dollar a little bit under pressure prior. I did hear somebody sort of saying that, like I said, sort of previously, it's been a little bit dollar positive post cut. You may see some short positions square up prior to that as well. That could also give us a little bit of dollar buying. Another thing to take into account with this as well is the US 10, which really is pushing right up here. So this is one thing that I sort of highlighted earlier in the week. And we are potentially seeing an inverted head and shoulders on this one. Not a perfect, because these are quite deep shoulders, but whichever, whatever. It is the sort of thing. We've got a low, we've got a lower low, we've got a higher low. We got a pretty straight line through here for a neckline. So it is actually set up pretty well. And you got to think, if the market is thinking, okay, yep, we're going to cut. Well, they're going to cut. Why would the yields be going up? Because sort of by definition in that they're cutting, so you'd think it should be weakening. But if this is moving up with the anticipation of a cut coming anyway, I would say it's most likely that the selling is done and it's already baked into the price. And that's where we use that one to sort of this sort of chart here to say, look, it's 80, 87, and you just assume that the market's priced itself correctly for this kind of stuff. But it's pretty much 87% chance of a cut. You're going to get outliers with people, but it's pretty much a sort of a widely accepted thought that they're going to cut 25 base point. Yields are still rising, possibly because they're forward thinking with it and they're sort of looking past this initial one and they're expecting them to go, hey, look, you know what? Our next move is going to be to hold and see how we go. And in that sense, it's actually, given the current climate, that's actually a bit of a hawkish move for them, should that come out. And measured move with this, obviously sort of speed dependent with it all, will come in pretty close to this sort of falling resistance over here as well, which we could probably almost sort of drag a little bit of a horizontal across with this. This is on the weekly. But if we sort of have a look at that, we're starting to get a little bit of a confluence that could potentially line up with this here. So, should we see a little bit of a push up here? That's kind of around that 432 we could potentially see. Now, again, how does it apply? Well, higher yields here is going to pretty much add strength to the dollar. And as I said, look, everybody's short with it all. Everybody thinks they're going to be cutting. Everybody thinks that the market's going to be sort of dumping the dollar. Well, what happens when they're caught off guard and it starts to squeeze up? That's what gives you your breakout with the US dollar. And obviously with this one, we're looking at it with DXY. So look, I wouldn't sort of count it out yet. First things first, get out of this channel. Second thing, get above 99.6. They're the kind of levels that I want to see break. Should we see that start to happen? Should we see yields continue on? Well, I would probably expect that we're probably going to see a little bit more US dollar strength into the end of the year. But they're certainly the levels that I'll be sort of highlighting. All right, so yeah, look, it's a bit of a tough one in that, but obviously the dollar is the big mover. Just a little bit of other data that we did get there into late 2 o'clock, and that I think this is the kind of stuff the PCE look, it came in as expected. Consumer sentiment up, that's quite a strong beat, obviously there. We did have inflation expectations coming down, and also that previous one had been obviously sort of been sort of revised down as well, which we saw the dollar flicking around when this was coming out of that. We got a bit of a push up, and then it took out the lows and blah blah blah, all this kind of thing. It gave metals a big push. Actually got silver to an all-time high. Off that kind of sort of mixed bag of kind of stuff here. But I think the takeaway with this is that inflation expectations down. Well, obviously, if you play these things out, well, if the market's thinking, okay, well, inflation may not be, or the market's not thinking that the inflation is going to be too bad, well, that means that eyes are on the jobs market, and the jobs market is obviously more of a dovish approach from the Fed in that regard. Okay, so having a quick look here, we got sort of the other sort of bit of data we did get out, which was a bit surprising this week, was GDP from Australia. So GDP in that 0.7%. This is actually revised. So revised up from 6% up to 0.7, sorry, 0.6 to up to 0.7. It came in at 0.4, which is obviously a bit of a slowdown of it all. But market did not care. As you can see, this is just on this is on the daily. Market has been ripping Aussie. This is over the last week and a bit. This is from Friday 21st. So last 2 weeks, nearly, or pretty much 3.5% there. If you have a look on the lower time frame, it did not stop. Hold on, let's get onto something with some lines on it. It did not stop even with that push there. So where was it? It was just this candle here. Because I remember I put a post up and I said, if this opens up underneath, I said, if this gets underneath 65.50, it's going to open up. Well, didn't get underneath 65.50. Market stepped in and went bang, pushed it up. This is a very interesting sort of bit of technical that I've always sort of liked using around these data points. Because I know there's a lot of people that are like, oh, we don't trade data and all this kind of stuff. And that's fine, each to their own, do whatever you like. However, one bit of data, price action around data, which I find is very strong, is what I call retaking the data drop point. Actually, probably don't give it a full name. That's just what it is right there. But if you unpack it, get onto a low time frame here, call this, where are we at here? Just this bit here. So this is where the data dropped, right? Dropped releases. That's fine. Data drop point here. The market took, what, about an hour to overcome that, and then proceeded to move on and obviously ran for the next couple of days, whatever. Point is with this is a very sort of high hit ratio technical that I've noticed. When the market sort of knee-jerk gets done with its knee-jerk reaction, okay, well, weak GDP. Well, weak GDP, what does that mean? That means that, okay, economy's slowing a little bit, even though it's still a positive. It's like, market was priced for 0 point. This is why the data is important. You've got to measure it against what the market's expecting. But the market's expecting 0.7%. They got 0.4%. Okay, what does that mean? That means that there's a little bit of a miss of expectations on the slower side. Well, does that go into a hold, cut, or hike response from the central bank? And obviously the response with this kind of thing is, well, if the economy's slowing, businesses are struggling. If businesses struggle, well, then they sort of, obviously employ less people, less output. In theory, the government should give them a helping hand. And how do they do that? They do that by lowering rates, which is dovish, which is why you saw the Aussie dollar sell off. Now, that's fine. That's what we call the knee-jerk reaction. That's textbook, okay, boom, boom, boom. But you can't just take, particularly with GDP, because it's not like top-tier kind of data. I call it third-tier bits of data. It's like retail sales and all this kind of stuff. It's a piece of the puzzle that you put in there. But the thing is that we've still got screamingly high, actually highest in the developed world, inflation at the moment. 3.8% we're at. And it's accelerating. We had a 1% jump the other month. So while you may sort of get this knee-jerk reaction because, if it was just that bit of data that we're looking at, well, obviously sort of the central bank would have to have a sort of bit of more of a dovish thought around that, and the market sold off. But if the market can take that bit of data in, digest it, and then still take out that level, so this is why I call the data drop point. So this is where the data dropped. Market goes, oh shit, oh, that's very dovish, response. But the market goes, well, that's fine. We don't care. We digest that, and you very quickly, like you got to do it pretty quickly, but you take that and overcome that data drop point. Well, generally that's a pretty bullish sign that you're going to see a continuation moving in that direction. Same goes for when things are moving on the downside. If people sort of like hear this thing and they go, oh wow, CPI was really high, it spikes up like this, but then the market goes, well, I don't care, boom, 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 boom. then you can expect it to then continue and move down there as well. So that's a very very strong sort of bit of data, well, technical analysis and technical approach around data releases. So all that sort of considered, obviously, bang, we're still moving up here. Now, also, what I mean, it's not just Australia data and that's the only thing that's going to move it. You've got to sort of add into the fact that we've been seeing the US dollar sell off. And so I always sort of say with the Aussie in that, there's a couple of factors that sort of drive it. There's the yuan, which I'll get to obviously a little bit later, as finally it's actually doing something. But not in this order. It basically US dollar strength, RBA, the yuan, and then equities. Aussie has not been responding to absolutely anything, pretty much, for the most of the year. As you can see, sort of if you put it on a high time frame, we have really kind of been stuck in a bit of limbo. It's more or less just sideways. We did have this sort of little fake breakdown over here of this triangle. It looked like it was coming down. Here's my price target down here. Wow, that was completely wrong. Anyway, the point is that sort of, we had this little fake breakdown of this triangle. It is absolutely ripped screaming up to the top side over here. We also have the RBA this week. So, you know what I mean? We're pretty much looking like a hold. So when you sort of step back and you go, okay, well, the Fed are looking to cut. RBA are looking to hold. Look at the spread between the two. Look at where we are. This is basically a good indication of sort of like where basically the difference in the outlook of the yields and that are. We're at the highest point here where we're sort of back in August 22. And if you put Aussie onto this chart, you can see where Aussie was at this point. I'll drag this down so it's actually usable. But we were around 71 cents last time this yield spread was up here. So if we go up over here, you can see last time this yield spread, where we are here, this purple line, plus minus a couple of points or whatever now, around this point here, yellow line's the Aussie, we were sitting at 71 cents. Right now we're sort of sitting at, what are we sitting at, 66. So there is potential for this to rip up to the top side here, but there's also potential for this thing to be coming back, crashing back down. So look, there's a pretty good sort of, if you look at these two charts, they're pretty much on par with how the price action will happen, bar this year. This year has been really, so let's drag this up and get a little bit deeper on this sort of thing here, but this year we've seen big divergences. So as you can see, sort of like, yellow line's Aussie, it's coming down. Well, this yield spread's coming down. Yield spread's going up, Aussie's going up. Yield spread's coming down, Aussie's coming down. More or less in line with it all. Have a look at April though. Yield spread flew up, Aussie sideways for most of it, and then spiked down. Bang, they came back up, they reconverged. So when you get these extreme moves to the top side here, you could probably almost sort of guarantee that we're going to get something that's going to bring these things back together. Again, down here, yield spread's moving down, Aussie's moving up. Yield spread's moving up, Aussie's just flat for most of the year, and we're seeing this sort of probably line up a little bit here, sideways, and it's dragging Aussie up at the moment. But this week's going to be very telling. The outlook, basically. So Aussie RBA, they're looking, again, nothing's a guarantee, but given how high our CPI is, and obviously the jobs not sort of being as bad, they were bad for a month there, but they kind of came back in line. So inflation is the sort of the main agenda for them to sort of mandate that they'll be sort of looking to tackle. If the main mandate that they're looking to tackle is the inflation, well, that's going to mean that they're going to have a little bit more of a hawkish kind of stance to it all. Now, I think it's like RBA is very renowned for being very slow to act, so I don't think they're going to be straight on the money hiking. So pretty much, I think sort of with inflation at 3.8%, 3.8%, jobs market not too bad, then I would say pretty much a hold is almost sort of in the bag. All right, back. So I'm actually just doing some notes up on that while I do this analysis. So yeah, look, we could sort of see that obviously Fed potentially cutting US dollar weakness. Let's do this. So we've got US dollar week, that's driving it up. We got most likely a hold from the RBA, that's driving it up. Equities, it's kind of detached from, so I'm not really going to sort of rate that so much on this. But then sort of like, we've got the yuan has been very strong, though is finally actually doing something, bouncing off the 38%, yet it hasn't really done a great deal. Like if we flip across, I'll touch on the yuan later, but we can see bounce right on the money on the 78% here. So, I mean, like, yes, it's had an okay week, or day, sorry, a day, but even on a weekly, it's all very well to have that, but look at where you're coming from. You know what I mean? It's got to do a lot more before it's going to be starting to sort of impact the Aussie. And by the Aussie, obviously, sort of like the stronger yuan is, the more sort of purchasing power they have potentially to buy stuff from Australia. And obviously, that's better for the Australian economy if we've got our number one trade partner strong, cashed up, ready to spend. Bang, in theory, they spend with us. However, bouncing off the 78%, potentially with a bounce, that could be seen as some potential downside for Aussie moving forward. Obviously, at this stage, it's a big breakout. Like you can't say, I mean, it's a fake breakout down here. Came off that sort of 64.20 level, zoomed up here 3.5% or whatever we said before, coming into a previous zone that we've got marked out from back here. Stopped on cue with the daily resistance levels. That's fine. Respecting the chart. We're really going to be dictated by what happens with the US. I think sort of like it's all very well for the RBA to be, hey, look, we're going to be on hold. And this is why this is important with this sort of yield spread here. Because at the moment, you've got RBA holding, you've got Fed cutting. That's the immediate. And this is what it's showing here as well. This is what this chart represents. Now, that's with the RBA most likely going to hold, Fed most likely going to cut. Favor in Aussie. If the FOMC happens, and if we see dollar strength, and if we see, and this is why I say if, because nothing's guaranteed, and you've got to have these things line up. But this is why we're prepared for it. If we see the Fed take a more, I guess, hawkish kind of stance, well, then all of a sudden the advantage that Aussie had in the sense of they're holding while Fed are cutting, well, that's actually eliminated, and you're doing a hold against a hold, not hold against cut. Hold against cut is what got this, and Aussie's been slow to react with it all. But if we get back to an even playing field in the sense of sort of Aussie against, RBA hold against Fed hold, well, all of a sudden that extra advantage isn't really there. And if we see the market start to buy the US dollar, and if we see, given this scenario, some sort of continued bounce, which would be a weakening of the yuan, we could see Aussie drift back down towards these sort of 65 levels over here. So for the time being, this kind of super weakness is off the cards. I think the hot CPI has kind of like at least sort of given it a lifeline, which we can see. Obviously sort of coming up over here at the moment. However, I think after this week, sort of hearing what the RBA has to say, which I think, again, look, you don't want to say, I keep saying sort of like, you don't want to sort of say, yeah, that's definitely what it is. But most likely, we're going to see them have a bit of a sort of look, inflation's out of control and that, and we got to do something about it. And, so we're going to be holding data dependent for the time, the time being. And that's the thing. Once we get a couple more CPIs, we'll have a better idea about what they're doing, particularly the quarterly, because, we heard Bullock say the other week that, quarterly is, well, the other month or whenever, quarterly is the number that they're looking for. We get the monthly now, so it's changing a little bit, but we get a full monthly. But the thing is sort of like, when you get those quarterly ones, that's what she was touting, then we'll know, okay, is holding having an impact? The thing is, if they hold and it doesn't have an impact, i.e. inflation keeps rising, then hikes are on the cards. And so that's why inflation is going to be very important for Aussie, because if we get a sort of a higher inflation, well, that's going to change the Fed's the RBA's outlook, and they're going to be saying, hey, well, you know what? Maybe our next move will be to hike. And if that's the case, Aussie could be trading up towards 70 cents next year. That's my outlook. However, if we see inflation tame down, if we see some US dollar strength, we kind of probably stay in this little box here for the foreseeable future. But I'm expecting probably a little bit of a cooling off, a little bit of a sort of position. This has been a very fast, hard move for Aussie in that. So maybe some sort of early weakness if we do see those dollar positions strengthen up a little bit, move back down towards that sort of maybe sort of 65, 60 area. Have a look at sort of how this is kind of developing and then sort of look for something potentially along these lines into the RBA. But I certainly wouldn't be buying Aussie at this point after it's just run up 3.5% with what's this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days straight bullish. It's due for a bit of a cooling. If we get those triggers on the DXY, remember obviously not part of the DXY, but that's the sort of that's the sentiment, broad market sentiment indicator, basically as I see it anyway, for how the market will be responding to the US dollar. If we see the broad sense of the market buying the US dollar, well, what is Aussie going to be completely ignored from that? No, it's going to be, either magnified or slightly retarded from it. So, yeah, I would say probably some move back down here, even just from a structural standpoint. Back test of 65.80s, overshoot down to 65.40s, and then have a look at what's happening when the Fed comes out, have a look at what's happening when RBA comes out. All right, and moving on. So we'll get into the metals. And this has been, look, it's been a tough trade actually. Just on this chart here, because I'll use this because it's a little bit cleaner than the other one. This was the little triangle we were dealing with, all right? So this was the little triangle, everybody's looking at it, blah, 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 blah. We broke out here, but it didn't fire on. I think that's got to be really sort of taken note of, because remember this one here? This was the sort of September triangle. This thing sort of held. Look at the breakout here. This broke and it just ripped. And you can see now, obviously, your hindsight, beautiful 2020, you could see where they were doing it. And this is the kind of thing that's just up, 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 up. Everybody, the man and the dog, was looking at this triangle. It wasn't hidden. We got the break, and it kind of did nothing. It kind of it rejected where we've got this other little support area over here previously on those highs, and it just really struggled and struggled and struggled. That last bit of data got this to really push up to the top, but look at this sell down afterwards. After it poked out here, bang, it got hammered. All things, I actually got clipped at 42.52, just here. I know, it's my first day trading. That was a little bit disappointing, particularly when literally, if you look at this is just, all things considered, 52 is just here. This is on a 15-minute chart, so, 30 minutes later, we're trading $50 lower, and then just dribbles into the end there. All you can do is laugh at that. Anyway, point is, from a high time frame perspective here, we've got triangle, we've got the breakout. This is what would be in this situation considered swing high. It's 1, 2, 3 times rejected here and closed down here. It actually closed the week bearish. For a big move and a breakout that everybody's looking at, here was the triangle. Oh, you can't see it here on this one. Yeah. There's your breakout when we were going re-rating. And that's all it was. It was re-rating. Look at this one down here. There's a triangle. There's your break, re-rating. Maybe not a triangle here, but anyway, we're going to put too far back there. But this is end of 2024. This is May this year. Was it May? May, September, sorry. Yeah, September this year. Look at the breakout when this happens. It doesn't stop and think about it. It just goes. This is on the weekly. So look, it's not counted out yet. But the thing is, why hasn't this, and you got to ask yourself this, why hasn't this bang and, gone up here, but, why hasn't this printed another big solid candle up over here? So a couple of things to unpack with this. Let's start with the sort of technicals. And the technicals is the thing that I like to call the body fill line. So when you get these big moves and it comes down here, people are sort of, oh yeah, look, they're targeting this. Wicks don't always fill. A lot of the time they do fill, depending. It's really sort of one of these things. You've got to sort of take it case by case and the price action around it. But this is what I call a body fill on candles. This is a good sort of place for a target. It's a good place if you're trying to get sort of fade a move or whatever. Point is, it took out that body fill and then it rejected down. So body fill is at 51. Yes, my stuff was at 52. Shocking. Anyway, and went up to what, 65, and then bang, sold down. So forget that's on the weekly. If you look at this on a daily, that is a really ugly candle to have in this situation. So basically, we've come up here, we've come here, right up like this, and market's just gone, that's great, chance for us to sell it, bang, and they bonked it on the nose. That was a bearish week close. You've tried, it was very choppy. I mean, if you look at, so just clear this up a little bit, look at the wicks on both sides of this. Market tried to move it up, they sold it down. Market tried to sell it down, they bought it up. Market tried to buy it up, they sell it down. Market tried to sell it down, they buy it up. Market tried to buy it up, they sell it down. Yeah, this is, compact this in to a weekly, a doji candle. And a doji candle is indecision. And you can see that because it's the combination of the two forces, opposing each other. Previously, on this breakout, we had the breakout. There's no such stuff. I mean, I guess maybe a little bit with this sort of sideways consolidation here, but not really because, it was still sort of moving up, up, up. So look, nothing's counted out yet. We could still see this move up because it is still technically up here and attempting this little breakout move here. But I question it at the moment. And if we drag this and connect this up, it actually came pretty close to making a little triangle of this breakout. Well, that's a fake breakout. If we look at this, just this little triangle here, so we're on the 4 hour now, we look at this little triangle here, that's a fake breakout. If you come back out the bottom of this here, well, you're looking at these kind of levels down here. And this is why it's important to go through these things on multiple time frames, because this could, yes, it's the same chart, of course, but a fake breakout here confirmed will break these levels. You'd be targeting, 41.50, 41.40, which was that breakout level here. Underneath that, well, we're kind of looking at sort of 41.11. And then underneath that, we're looking at 40.40. And I know this seems crazy because, close your eyes and buy metals. That's the trade of 2025. We've just had all-time high again on silver. This is really just a sniff off of the all-time highs. But this is what I'm saying, that sort of if the price confirms it, and we see price trading down here, well, you've got a fake breakout of this little section here. You're going to go back and you're going to test where the buyers have been previously. Well, here's a little support. This is where the buyers are going to be first. Then underneath this, you potentially have a topside test of this falling resistance, which is the triangle. And then underneath that, you're coming down over here. So they're the kind of sort of, should the fake breakout occur, these are the levels that I'm going to be looking at. So it is a little bit of a sort of an early sign of a signal. It's not sort of confirmed yet. So that's downside. Should we sort of take out this 41.75? So put a little line in through here. Put a little alert on it. I'm going to say this is breakdown line. 41.75. So if we come through this level here, let's make it a different color. It's a body fill color. Light blue. That's great. Anyway, point is, should we take out this low, 41.75? Yeah, you've got this wick here at 41.63 or whatever we saw on Tuesday, Wednesday here and that. But most likely, these are the levels that I could see price continue down. Fake breakout leads to a breakdown or break up, depending where you fake, the opposite direction of the fake breakout. So all things sort of considered, high time frame, you haven't had sort of strong continuation. You've got potential fake breakout on this 4 hour. Put a little support down through here. That's a little zone for us here. So we could say that that's the zone at what, 41.80. But take out the wick to be sure. Obviously a close down underneath this section here. That's going to be the bigger confirmation. And then we look for these levels here. Look, you're going to get a reaction here because you've seen it. You've seen the price here. They were resistance, support, chopped around here, but it was the last little push off when we had that dodgy price action the other Friday. You're going to get a reaction here, but it's all about watching how the market reacts as it comes into these. Close down under here, you'll get a move here. You'll get a reaction. Second effort, the three legs. This is what I always talk about. One leg, two leg, three leg. You're going to get high, low, double bottom, continuation. Should you get the second leg closed down here, you might get a bit of a reaction around this level over here, this 41.20 and that, but most likely you're going to get some sort of touch up of this falling resistance here. So at this point, depending, obviously speed dependent, if it sits along sideways for a bit, less likely, of course. But should this thing continue through come Monday, we could see a bit of a push down over here as well. Again, look, we've got the US 10 yields rising. That's none of these things are a one-off, but that's going to weigh on gold upside. And we saw that. US 10 yields. Oh, look at this, actually came up with the right one. But we lost our we lost our gold chart. So where were we? Look what's happening when they match up the candles. We had that one push up here, this one here, a little down, and then came up here. But as the US 10s are rising, you're seeing gold sell off down here. Again, it's not the old, they don't match one to one because obviously this is rising sort of through the week, but this didn't go anywhere this week. And that's what I'm saying. It's, this is still at its lows of this kind of whole move here. It hasn't confirmed, hasn't broken out yet, but certainly with US 10 yields rising, gold did not move anywhere. If this keeps rising and breaks out, most likely it's going to weigh. It's just another factor. It's not the only factor, but it's another factor that's going to weigh on downside for gold. And that's why I think that there's a potential that this does break out. It hasn't broken out yet. But should this thing break out, you'll see dollar buying. Get the cut out of the way, see the breakout over here, have a bit more of it. This is the scenario, the world in which this works, is that you get the cut out of the way. They have a hawkish outlook going on hold for a little while. We see a repeat of the price action post cuts that we've seen with the RBNZ recently and with the Fed a number of times over. We see the US dollar move up. We see yields move up. We see that put pressure on gold, gets the move to the downside over here. It doesn't mean it's definitely going to happen. Nothing is certain like that. But that's the scenario. That's the world in which we do see downside on metals here. And this little bit of price action here is kind of showing this. If we just another sort of little part of the technical with this as well, should we break down this part here, you could be seeing people calling this a double top. Let's have a look. Where would the measured move be, not including the wicks, because I don't include the wicks. This one I'm using the body over here, body fill. This is another, as I said, this is how price action can be exactly the same with all time frames. Look at where this closed. So where it filled. There's the body fill. Took it out, moved it down. It was the body fill of the weekly one as well, but you can see what I'm saying, where I'm going at with this. Anyway, put that back to where it was. If we do see this to be seen as a double top, doesn't mean because you get a double top on a 4 hour that the market's going to 3,800. But if you get a break under this level here, you've got the fake breakout of the triangle, you've got the double top, and the double top comes down to 41.11. So there's a few things that are lining up for me, and I think a big signal for it is if it takes out this line, because you've got a bit of a double top with a measured move price target down to 4111. So just being fair to everything, obviously we haven't got this break yet. It did get slapped down, it was the end of the week, yada yada, all this kind of stuff. So considering both sides of the coin, it is still putting in high lows. We've got a flat line here. I think a break above these wicks over here, then you're looking for tests of all-time highs. We've got the triangle. It may have stalled here, but a stall doesn't guarantee the breakdown. That's why we look for these lower time frame signals to see a little bit of a correction. But should we see it go above 42.63, 42.70 is probably because we've got a little bit of sort of resistance up over here. But above here, 42.80, I would be saying, hey, look, you're probably realistically targeting all-time high tests. So put a little alert there as well. And the good thing about, among other things, is this alert here that we just put in. It doesn't matter if it comes back down here because it's still bullish. So there is room for this thing and on a larger time frame to do this and then go like this. I mean, breakouts, I always say with these sort of angled sort of things, so falling resistance, the breakout level is always the first touch, which is what we got. Strong reaction. You've seen it try to continue. Most likely people go, hey, this is a failed breakout. We're going to come lower. It doesn't mean that we're necessarily coming back to 3,700. But what it does kind of mean is you'll get some people that bought the breakout. They've tried again, they've failed. They'll start to go, hey, hold on, wait. I bought the breakout because I thought we were going to 4,500 or 4,700, whatever, some high number, least test all-time highs. That has not happened. Well, I need to get out of this position because I'm bought at the highs. You know what I mean? And this is the psychology behind these sort of things as well. Not everybody's a shrewd investor that's been holding since down here. And if you are, well, you're tough as nails because these are some big corrections. But the point is, people buy this breakout here, they buy this second effort, they buy this third effort. If you get a whole bunch of these sort of levels that don't prosper and sort of turn into something positive, well, what's going to happen? People are going to go, I need to get out. I bought at the highs. I bought the breakout. I want to get some sort of profit. And that's going to cascade these things back down to the downside over here. So, look, I guess I get it. It's behind the sort of curve of everything at the moment. But I would say, should we break this 41.74, I'd be looking for downside and potential buy opportunities at lower levels. And if you think about it, sort of like, with metals, they've been on such a rip all year. We're getting into December. Do people want to sort of like make their bonus checks? Do people want to make their books and their sort of yearly profits look pretty damn good? Well, probably, yeah. High return, bang, give me the fat bonus check. Well, what are they going to do? They're going to lock in some of the profits. Are you really going to sort of, and that's the thing, if they sell out here, if you're like a sort of a staunch sort of investor, whatever, you're dealing with a lot of money, you're not selling out here and buying back in here. You sell here, you'll go and have Christmas, you'll enjoy yourself, you'll get your big fat bonus check, and then you'll come back and you'll buy in back over here or something, come the new year, into January. Could be even lower. I mean, look, this thing could come back to sub 4,000 and still be considered bullish. This isn't even the yearly run, I don't think. This is just September's run. So the thing is still incredibly bullish, but doesn't mean that we can't see some downside before then. And look at this as well. This could potentially be turning into a larger range through here. So to me, that's going to be the crucial line, 41.75. If that breaks, these are the targets that I'm looking for, and then look to be on the buy side potentially at these levels. But maybe into the new year. All right, on with silver. This is going to be a pretty long video on that, but that's okay because there's a lot going on, so we're going to talk it out. So we've seen obviously the big massive break. I mean, massive break. But last Friday, we saw this big move over here. How big was Friday's move this week? About 5% or so again. Probably a little bit lower by the time we closed, 3%. But look at the Friday move. This is Friday here. Yeah, Friday, 5%. Now, what's interesting with this is if you look at these measures, these little blue things here are the last 4 Fridays. Down 6.5, down 5.5, up 4 and a bit, up 5. But again, here's a big breakout, and it hasn't really done anything. It's gone back and forth, back and forth. So all you can really say with this is it's a range. It is. It's a range. Like, you know, there was a couple of different views in that of it all, but this is a range here. So failure to break out doesn't mean break down, but it does mean most likely you're going to target 57, I would say. So 57 on a break of 57.90. So it's not really a great deal. I mean, in the scheme of things, it's only $1. But you got to look at things as well in that sort of sense. If that were to be the case, if you were to come back to 57 now, you're going to be breaking this channel here, which is going to get people a little bit sweaty, in my opinion. So, you know, we could open up on Monday and go up over here, but obviously they tried it. They got slapped on the nose. Break down underneath here. Put a little alert on it. So underneath 57, look, 57.80. I've noticed actually the 80s level, very big repeater on silver. Every dollar that comes up is always a pretty good sort of, if you want to counter something, 80s is a good sort of position to try and do that. But we break down here, so we'll be targeting range lows at 57. But that also takes us outside this support, which I really thought this was going to break down on Friday. And again, all things that are out there, I got clipped out at 59.31, 32. It looks like I didn't even hit it on this chart, did it? 31, 31, there. I mean, sometimes you can't make this stuff up. Anyway, whatever. That's the game. That's the life that we choose. Anyway, so what do we do from here? This is the level that I'm targeting. We break down underneath this. We first target the low part of this range. And this range could be, look, I'm using the body fills down here, but it could be down to, you know, this 56, 53. You break 56, 53, that's going to be your move. Back down to retest this big breakout line here. Because there's a couple of things that sort of tell me this. One, obviously you've got the range and you've got the fail of the range. So a measured move of that range, I'm just doing this to sort of see where this does line up to. Measured move of this range comes down around the 38%. But you've also got the break of this channel. And the channel sort of would be, the way that these things work is the size of the channel from the break level, which gives you a move down to here. So they're the two levels I'm going to be sort of looking for, downside wise. And again, I know it could be crazy because, you know, we're literally just put in an all-time high, you know, last night. But as you can see, what happened last time with our big break? Here's the break last Friday. Boom. It did not think about it. It went up, it went up, it went up. What happened on this Friday? Apart from the fact it used all its energy just to get to the top, to the resistance, it went to break, and people said, oh, that's good, I'm going to take it down. Now, if it's going to sort of $65 in this particular move, you would have wanted it to wide in it hold there and keep on punching up. So again, it's not confirmed, but it does make you question it. And, you know, as I said, we got FOMC this week. These things, if we see US dollar strength, are going to weigh on silver. So for me, underneath 57.76. Okay, so just writing up the notes as I do this sort of stuff. So as I said, look, if we sort of said all things considered on the top side there, look, you probably run into $61 because this is a range. The size of the range gives you the measured move price target, would take you 60, 90, thereabouts. But as I said, I think sort of the risk is that this is potentially going to sort of come down through here. You wait for the confirmation. The confirmation will be underneath that 57.70, 57.76, whatever. This little alert. Take out these wicks here. Your first target is to come down to this support here. You're going to get a reaction here because We've seen it time and time again. So as it comes here, you get the reaction, but we want to see what do the sellers do. Because remember, it's got, okay, so you've got them buying like all the way up through here, but you can see push back here, buyers pushed it up, sellers pushed it down. Market said, great, I can buy it again. They pushed it up, sellers pushed it down, buyers tried to advance up, tried to go for a double break. No, didn't get it, sellers came down here. Where did it go to? Once these sellers here were depleted, and you can see the candle moves through here, where does it go to? It goes to where the buyers were previously, which is here. They're, oh, great, look at this, another chance to buy it up. Boom, we buy it again. What does it do? It's going to, well, it hasn't done it yet. It's going to test these buyers, which kind of did through here on that candle. But should we see this move again, and this is what I'm saying, this is why the alert's here. If we see that these buyers aren't here, we're going to test to these buyers here, moves up. What happens when the sellers start to get on the advance and they start to push it down and it moves like this? That's what I'm sort of thinking potentially to look for. A break of this level takes you outside the channel, gets people a little bit sweaty. Momentum's really stalled because you're now going sideways, you're not going up. And then if we see the sellers apply pressure, so say, hey, look, you know what, I've got all this break, I took my profits here, shit, it's starting to break down, I'm just going to get out of this. They're going to take here. What happens when the buyers aren't here? Well, you're going to test the buyers at the next level. The next buyers are really all the way back down over here near that breakout. And this is what could be giving us a move back down to 55. Again, look, this is all speculation. This is why we wait for the confirmation. And if we see this, well, that's what price structure is. And this is the flow, this is the price structure that I deal with. So there is potential for a downside, but of course, ultimately very bullish. So, you know, upside breaks are obviously potential because this was just the end of the week. However, it's not without a reason that you get a breakout, failure to sort of go forward, like with gold, people get a little bit about it. They come back down here. Well, this is a breakout, back test. Then you go up like this. There's potential for this. And the reason that this move could overshoot this is because there'll be a lot of people that go, hey, I bought the breakout. I'm a superstar. It's going to 70. Look at me. I'll put my stops to even. I've got zero risk. Well, you know, let's just take care of that. Take out those stops. That gives you an overshoot. And then you get back on with the story, the main story, which is very bullish, upside silver. So I do think there's upside for silver to come in 2026 particularly. I think we've probably got some very big upside to come. However, I do think, given the fact that we're at the end of the year, given the fact that it's gone up 100% or something, there's a very reasonable possibility that people start to go, hey, let's lock in some of that profit, particularly if we get the technicals to back it up, and they sort of lock in the profit. That gives you a bit of a cascading effect, comes down a little bit lower before people start to sort of come back from Christmas around this time over here and they go, hey, that's great, let's buy it up again and take it on for 2026. That's the play. That's how I'm sort of viewing these things. Cool. And finally, just for the yuan, I won't get too much into the yuan, but this was something that I called on whatever day it was, I can't remember, was this big 78% fib. Look at this one. Now, we've broken that big yearly triangle, backtest line coming down here. This isn't necessarily the be-all, end-all of it all, but it's given back a big chunk of that. And look at the reaction. This green line down here, where we've got the alert, 78% fib. Look at the reaction that we got off that. The market is looking at that line. That's what it is. The market's not sort of like, oh, I guess. The market's looking at that line. So we draw it out a little bit as well, and all of a sudden we're starting to get a little bit of a channel going here. Now, what does it mean? Well, it means that potentially we could see this squeeze back up to these levels over here. Now, if we put a little horizontal through here, we say, look, you know what? Here's some buying support, buying support, buying support. What's going to happen when things come back up over here? You're going to get a reaction. They're going to sell it down. But should this continue here, and I think above this alert over here, this little one we had on the way down, every alert says bounce. Should we see this thing continue up over here and squeeze up over here? Well, weak yuan, it obviously also means probably a little bit of US dollar strength, which has an inverse reaction with the metals. And the idea being that sort of like, you know, I mean, there's a bunch of different sort of thoughts on this, but one of the ideas being is that if you've got a weaker yuan, then it's going to cost you more to buy gold. If it costs you more to buy gold, you're not going to buy so much. The demand drops. The demand drops, well, the price drops. So China's touted as being one of the biggest buyers of gold. And if it's going to cost them more to do it, then they're going to go, hey, let's hold off for a little bit. And it's a sort of self-fulfilling prophecy with this kind of thing. Again, none of these things means it's going back up over here. I mean, certainly there's a possibility. We'll see what happens with the new year. But if you look at what the yuan's done since April, again, let's have a look at the two charts of this. Have a look at, say, gold or silver, for that matter. Let's clear all this up. It's on the daily as well. So you can see with the little dotted lines on each chart, they line up the same time. On the left chart here, this is the big spike, and yuan has strengthened ever since. You can see match up here with the two charts, the dotted lines are both of these. This is silver. That's, I mean, this comes straight down, this comes straight up. So this is why the yuan's important, because if we do see this squeeze up here, it doesn't mean that we're coming back up over here. It's not the point of this. The point is that there's some real possibility that we see the yuan push up. Well, what happens with the yuan when silver pushes up? I mean, even look at this little dip. Actually, they both dipped through this point here. This is against my argument a little bit there. But the general theme of it is a stronger silver. I'm about to run out of battery on this thing. But the point is that if we do see the yuan squeeze here, we could potentially be seeing a little bit of a pullback in these metals. Again, look at sort of where gold was. Gold was already in a bit of an uptrend. But look at this spike here. And this is where gold is. Where gold is now, where yuan is now. So should we see a little bit of a push up here, there's a very real possibility that we see price come back a little bit. And it doesn't mean that it's falling over completely, but there is some room for some profit. And this is why we look at the smaller time frames and we go, you know what? There's real possibility that this thing could roll over a little bit and sort of come back down a little bit lower. All right, that's it from me.